Welcome to the channel, investors. Today we're diving deep into the world of real estate, a world brimming with opportunity for those seeking financial freedom. For years, I've seen firsthand the incredible wealth-building potential of real estate. It's a tangible asset, a hedge against inflation, and a proven path towards generating passive income. But navigating the real estate landscape effectively requires knowledge, strategy, and understanding the tools at your disposal. One such tool, often overlooked but incredibly powerful, is the 1031 exchange. Section 2, Unlocking a Secret, introducing the 1031 exchange. The 1031 exchange, named after Section 1031 of the Internal Revenue Code, might sound complex, but its essence is surprisingly straightforward. Imagine selling a property and reinvesting the proceeds into another property, all while deferring capital gains taxes. That's the power of a 1031 exchange in a nutshell. Instead of letting Uncle Sam take a hefty chunk of your profits, the 1031 exchange allows you to keep that money working for you, fueling further investments and accelerating your journey towards financial independence. Whether you're a seasoned investor or just starting, understanding this powerful tool can unlock a world of possibilities in your real estate journey. Now that we've established the incredible potential of the 1031 exchange, let's break down its mechanics in simple terms. Essentially, a 1031 exchange allows you to swap one investment property for another, deferring the capital gains taxes you typically incur on the sale of the first property. Think of it as a strategic pause on paying taxes, giving you more capital to reinvest and potentially see even greater returns in the long run. But remember, this isn't about avoiding taxes altogether. It's about strategically deferring them to your advantage. The beauty of a 1031 exchange lies in its simplicity and effectiveness. By reinvesting your proceeds into a new property, you're essentially telling the IRS that your investment journey isn't over, it's simply evolving. Section 2, Like, Kind and Qualified Properties, Decoding the Jargon. Now, you might be wondering what exactly qualifies for a 1031 exchange. Don't worry, we've got you covered. The IRS uses the term like kind to describe eligible properties, which essentially means you're exchanging one investment property for another. This is where the flexibility of a 1031 exchange shines. You're not limited to swapping identical properties. For instance, you could sell an apartment complex and use the proceeds to acquire a rental vacation home, or even exchange raw land for a commercial building. However, it's crucial to remember that the properties involved must be held for investment purposes. This means your primary residence or a property you plan to flip quickly for a profit wouldn't qualify. Understanding the nuances of like kind and qualified intermediary is crucial for a successful 1031 exchange. Section 3. Time is of the essence, understanding 1031 exchange deadlines. While the concept of deferring taxes might seem like a no-brainer, navigating the 1031 exchange process does involve adhering to specific timelines. The IRS has established strict deadlines to ensure a smooth and compliant exchange. Once you've sold your relinquished property, you have a limited window, known as the identification period, to identify potential replacement properties. This period is typically 45 days, and it's crucial to act swiftly and strategically. Following the identification period, you then have a 180-day exchange period to close the deal on your chosen replacement property. These deadlines are non-negotiable, so planning and meticulous execution are paramount to a successful 1031 exchange. Section 1. The tax deferral advantage, keeping more money in your pocket. Let's face it, nobody enjoys paying more taxes than they have to. That's where the 1031 exchange truly shines. By deferring those capital gains taxes, you're essentially giving yourself a free loan from the government, allowing you to reinvest a larger sum of money and potentially see greater returns. Imagine selling a property for a significant profit. Without a 1031 exchange, a portion of those hard-earned gains would go straight to the taxman, limiting your reinvestment potential. But with a 1031 exchange, you can preserve those profits and put them to work immediately in a new investment. This tax deferral strategy can be especially beneficial in hot real estate markets where property values are rising steadily. As your investments appreciate, so do your potential capital gains taxes. A 1031 exchange allows you to ride that wave of appreciation, deferring taxes along the way and maximizing your wealth-building potential. Remember, it's not about avoiding taxes forever. It's about strategically timing those tax payments to your advantage, allowing your investments to compound and grow exponentially over time. Section 2, Building a Real Estate Empire Using 1031 Exchanges for Portfolio Growth. For ambitious investors, the 1031 exchange can be a secret weapon for building a truly impressive real estate portfolio. It's like a game of property chess, strategically swapping one asset for another to enhance your holdings and maximize returns. Let's say you start with a small apartment building. As you gain experience and your financial situation improves, you might set your sights on a larger complex with greater income potential. A 1031 exchange allows you to seamlessly transition to that larger property, deferring taxes and leveraging your equity to its fullest. Moreover, 1031 exchanges aren't limited to simply upgrading to larger properties. You can also use them to diversify your portfolio geographically or across different asset classes. For instance, you could sell a property in a saturated market and use the proceeds to acquire a vacation rental in a high-demand tourist destination. The possibilities are truly endless, limited only by your investment strategy and the available opportunities in the market. With careful planning and execution, 1031 exchanges can be the catalyst for building a real estate empire that generates passive income and secures your financial future. Section 3. Flexibility and control. Adapting to changing market conditions. The real estate market is a dynamic beast, constantly evolving with economic trends and shifting demographics. What makes the 1031 exchange so powerful is its inherent flexibility, allowing you to adapt your investment strategy to capitalize on new opportunities and navigate market fluctuations. Let's say you own a commercial property in an area experiencing economic decline. Rental income might be dwindling and property values could be stagnant or even declining. A 1031 exchange gives you the power to exit that market strategically, reinvesting in a more promising location with stronger growth potential. Furthermore, 1031 exchanges can be used to manage risk and optimize your portfolio's performance. If you're approaching retirement and seeking more stable passive income streams, you could exchange a property with high maintenance costs and tenant turnover for a triple net leased property with a long-term reliable tenant. The ability to adapt to changing market conditions is crucial for long-term success in real estate investing. The 1031 exchange provides that adaptability, empowering you to make strategic decisions that align with your financial goals and risk tolerance. Section 1, Step-by-step, navigating the 1031 exchange process. Now that we've explored the benefits of a 1031 exchange, let's demystify the process itself. While it might seem complex at first glance, breaking it down into manageable steps can make it much less daunting. The journey begins with identifying a suitable replacement property within the strict 45-day identification period. This requires swift action and thorough market research to ensure you're making a sound investment decision. Once you've identified potential replacement properties, the next crucial step is securing a qualified intermediary. This neutral third party plays a pivotal role in facilitating the exchange, ensuring all legal and tax requirements are met. The qualified intermediary will handle the funds from the sale of your relinquished property, ensuring they remain separate from your other assets. They'll also coordinate the purchase of the replacement property, adhering to the strict timelines outlined by the IRS. Throughout the process, it's essential to maintain clear and consistent communication with your qualified intermediary, real estate agent, and tax advisor to ensure a smooth and successful exchange. Section 2, the qualified intermediary, your trusted guide in the exchange. In the world of 1031 exchanges, the qualified intermediary isn't just a helpful resource, they're an absolute necessity. This independent third party acts as the guardian of the exchange process, ensuring everything runs smoothly and complies with IRS regulations. Think of the qualified intermediary as the conductor of an orchestra, coordinating all the moving parts of the exchange. They hold the proceeds from the sale of your relinquished property in a secure escrow account, ensuring they're not commingled with your other funds. Moreover, the qualified intermediary prepares all the necessary paperwork, facilitates the transfer of funds, and ensures both the relinquished and replacement properties meet the IRS's like-kind requirements. Choosing the right qualified intermediary is paramount to a successful 1031 exchange. Look for a reputable company with a proven track record, experienced professionals, and a commitment to transparency and communication. Remember, the qualified intermediary is your trusted advisor throughout the exchange process, guiding you through each step and ensuring you reap the full benefits of this powerful tax deferral strategy. Section 3. Potential pitfalls, common mistakes to avoid in a 1031 exchange. While the 1031 exchange offers incredible advantages, it's not without potential pitfalls. Understanding these common mistakes and how to avoid them can save you from costly tax liabilities and headaches down the road. One frequent mistake is failing to meet the strict 45-day identification period or the 180-day exchange period deadlines. These timelines are non-negotiable, and missing them could disqualify your exchange, triggering immediate capital gains taxes. Another common error is directly receiving the proceeds from the sale of your relinquished property. Doing so, even momentarily, can jeopardize the entire exchange process and result in unexpected tax consequences. Additionally, failing to properly identify replacement properties or choosing properties that don't meet the like-kind requirements can also derail your 1031 exchange. It's crucial to consult with a qualified tax advisor or real estate attorney specializing in 1031 exchanges to ensure you're on solid ground. Remember, knowledge is power when it comes to 1031 exchanges. By understanding the potential pitfalls and taking proactive steps to avoid them, you can maximize your chances of a successful and rewarding exchange experience. Section 1. Case Study 1, the savvy investor who upgraded their portfolio. Let's dive into some real-world examples to solidify our understanding of how 1031 exchanges work in practice. Meet Sarah, a seasoned investor who'd owned a small apartment building for several years. While the property generated steady cash flow, Sarah had her sights set on a larger complex with greater income potential and appreciation possibilities. However, selling her current building would trigger a hefty capital gains tax bill, significantly reducing the capital she'd have available for reinvestment. This is where the 1031 exchange came into play. Sarah worked with a qualified intermediary and a savvy real estate agent to identify a larger apartment complex in a desirable location with strong growth potential. Within the 45-day identification period, she had a signed purchase agreement, and within the 180-day exchange period, the deal was finalized. By utilizing a 1031 exchange, Sarah seamlessly transitioned to a larger, more profitable property while deferring those capital gains taxes. This allowed her to maximize her reinvestment power and accelerate her journey towards building a truly impressive real estate portfolio. Section 2, Case Study 2, Diversifying Holdings with a 1031 exchange. Next, let's meet Mark, an investor looking to diversify his real estate holdings and mitigate risk. Mark owned a commercial property leased to a single tenant in a sector experiencing economic headwinds. Concerned about the long-term viability of his tenant and the potential decline in property value, Mark decided to explore his options. A 1031 exchange provided the perfect solution. Mark identified a portfolio of single-family rental properties in a stable market with consistent demand. These properties offered diversification across multiple tenants and a different asset class, reducing his overall investment risk. Through a well-executed 1031 exchange, Mark was able to exit a potentially risky investment and transition to a more diversified portfolio aligned with his long-term financial goals. Section 3, Case Study 3, Navigating a Challenging Market with a 1031. Finally, let's consider Emily, an investor who found herself facing a challenging real estate market. Emily owned a vacant lot in an area where development had stalled and property values remained stagnant. Despite the challenging market conditions, Emily had a vision for the property's potential. She identified a developer who was interested in acquiring the land and constructing a mixed-use development project. However, selling the vacant lot would trigger capital gains taxes, significantly reducing the capital Emily had available to reinvest in a new opportunity. Once again, the 1031 exchange proved to be an invaluable tool. Emily worked with her qualified intermediary to structure a delayed exchange. This allowed her to identify a replacement property after the sale of her vacant lot, providing her with more time and flexibility to find the perfect reinvestment opportunity. As we've explored throughout this video, the 1031 exchange is a powerful tool for real estate investors of all levels. It's not just a tax deferral strategy, it's a gateway to unlocking hidden potential in your investments and accelerating your journey towards financial freedom. Whether you're seeking to upgrade your portfolio, diversify your holdings, or navigate challenging market conditions, the 1031 exchange provides the flexibility and control to make strategic decisions that align with your unique investment goals. Remember, it's not about avoiding taxes altogether, it's about strategically deferring those taxes and leveraging that capital to fuel further growth and generate greater returns over time. The power of compounding, coupled with the strategic advantages of a 1031 exchange, can be a game changer for your real estate investing journey. Navigating the complexities of a 1031 exchange requires careful planning, meticulous execution, and a thorough understanding of the IRS regulations governing these transactions. While we've covered the essentials in this video, consulting with qualified professionals is crucial for a successful and stress-free exchange experience. A seasoned real estate agent specializing in 1031 exchanges can help you identify suitable replacement properties that meet your investment criteria and align with your long-term goals. A qualified tax advisor can provide personalized guidance on the tax implications of your exchange and ensure you're maximizing the benefits while remaining compliant with all IRS regulations. And of course, partnering with a reputable qualified intermediary is non-negotiable. They'll act as your trusted guide throughout the entire exchange process, handling the intricate details and ensuring everything runs smoothly from start to finish. In the world of real estate investing, knowledge is power, and the 1031 exchange is a powerful tool that can propel your investments to new heights. By embracing this strategy, you're joining the ranks of savvy investors who understand the value of long-term growth, strategic tax planning, and maximizing returns. Remember, the 1031 exchange isn't a one-size-fits-all solution. It's a strategic tool that should be carefully considered in the context of your overall investment strategy, financial situation, and long-term goals. By taking the time to educate yourself, seeking expert guidance, and approaching each exchange with a well-defined plan, you can harness the power of this strategy to build a more robust, profitable, and resilient real estate portfolio. As we wrap up, I encourage you to take action. Don't let the potential of the 1031 exchange pass you by. Start by deepening your knowledge through further research, attending webinars, or connecting with experienced investors in your network. Next, assemble your team of experts, a real estate agent, a tax advisor, and a qualified intermediary who can guide you through every step of the exchange process and ensure a successful outcome. And finally, start exploring potential investment opportunities with a 1031 exchange in mind. The real estate market is brimming with possibilities, and with the right knowledge and strategies, you can unlock incredible potential and achieve your financial dreams. Thanks for joining me today, and remember, in the world of real estate investing, fortune favors the bold and the informed. Happy investing.